All right, what's up, guys? What we got in front of us here is the Eternal Success weekly trading plan. Okay, you want to fill this thing out every single week, and then you can go back and see mind-blowing data. Okay, guys. So how it works is the entry rules for every trade. You must have at least 3 confluences. Obviously, the more the better, but you must have at least 3. Okay, and as you can see here, in each week we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. You don't want to take more than 10 trades a week, guys. Trust me, the more you trade, the worse it is. So you need to trade high-class trades, only 10 trades maximum a week. So at the top, you got the pair in the day. So for example, you could put gold and Tuesday. Okay, so you could do that, and then here you could put the NASDAQ on Wednesday, etc. So you put your trade and your day. Okay, then these are the confluences. So you need either trend line, which I'll speak to you about specifically how to draw trend lines the correct way and which time frames to use, and a pattern. A pattern is on the way up. In an uptrend, it's a M. In a downtrend, it's a W. Okay, you need a fib. A fib would be the 61.8 level or the 78.60. That would be the fib. And then price action. Price action is how it got there. Is it going impulsively and correctively, or are you buying against an impulse? Okay, I'll teach you guys a bit more about that as well. Now, this is a liquidity pool. A liquidity pool is generally a level where people put their stops, and then the big institutions know that everyone's stops are there, and they do a stop hunt, and they get everyone out in a liquidity pool, and they drop the market the other way. Okay, if you can find a liquidity pool, that's brilliant. Okay, then we got structure. Structure is support and resistance, but not just any and every tip you see, guys. It needs to be high time frame, big levels. Okay, then the key quarters level. So if a level that you see, for example, gold, if it's $1,750 an ounce, that 750 is a quarterly level. So all quarters is from 0, then it's 2.5, then it's 5.0, then it's 7.5, and then it's the 10. Okay, so quarters is a good key institutional level. Now the divergence. The divergence is with an RSI indicator where the market, for example, is going down, but the divergence shows upward. So the RSI would have an upwards trend, and the market is going the opposite way. That's a divergence. The news, for example, if it says the Australian dollar, they blah blah blah, and it's gone weaker. So if you're going to sell the Aussie dollar and the news also says it's gone weak, that's an extra confluence. Okay, CTL break and retest. That means counter trend line break and retest. So if you've got an uptrend, okay, the market has pulled back down, you've got a counter trend if it breaks and retests. Okay, that is a brilliant entry. Okay, you combine that with a fib, etc. So then you score each trade. You score the trade out of 10. So for example, for this trade, we got 1, 2, 3, 4, 5, 6, 7 out of 10. And then all your trades, you score them out of 10. And then you're going to see patterns that all of your trades under, for example, 3 confluences, they probably lose. Okay, so then you're going to stick to these data informational patterns. This is what you're also going to do. So you need to stick to a maximum of 5% risk. Okay, this is for a general forex trading account. It's not the specialized NASDAQ strategy that I'm speaking to you guys about, the 100% bonus. That's different. This is a general real account. Okay, so 5% risk maximum, guys, and you always have maximum of 5 entries. You don't want to be a ninja trader and boom, 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 put a bunch in there. 5 at most, preferably just 3. If you're going to swing trade, you put in 5, and then you can take profits out on the way. Okay, so you can say you didn't beat 5 entries, well, you were below 5 entries, which is correct. You are under 5%. 5% doesn't mean 5% per trade, right? Your 5%, for example, a trade on gold, if you're going to have 5 entries, your trade size, according to your stop loss, should be 1% per trade, okay, not 5% per trade. So the 5% risk can be divided into 5 different trades. Okay, This year, your stop loss is moved to break even at first TP. You did that, okay? You said you stuck to your rules. Your stop loss is moved at each TP. So at each take profit, do you move your stop loss up, okay? And you stick to that. If you score your trade 4 out of 4, great. After the trade is done, you need to put in your pips. So for example, if you got 50 pips, and then over here your profit is in dollars or in rands, okay? You need to put that down. Then your trade notes, you put in here, I cheated, etc. So you didn't stick to your rules, blah blah blah. And then you see, so you make a note after every single trade, guys. And then in a week's time, 1 2 3 4 5 up to 10 trades, you can look back and have incredible data, okay? Now this is a special thing I put in here, which I created, called the demon finder. All right, so this is where you find what your biggest problems are. Okay, so we got over here, you entered too soon. The price didn't come down to your correct level because you thought it was going to go without you, and you weren't patient and you entered too soon. Okay, you entered too late, and then you exited too soon, exited too late. Trade not in plan. So if you just trade with your intuition and it's not in your plan, and you were lazy and you just, oh, I think it's going to go, and you traded not in your plan, you can click that. This one, big one, fooled by chasing a candle. You see a massive candle, boom, 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 going, and you're like, oh, and then you have greed because you want to get in, and you have FOMO because you think you're going to miss out, and you buy high, and then it tanks the opposite way. Okay, fooled by chasing a candle. Here is if you have a stop loss and it's coming down, it's about to hit your stop, and you move your stop loss away, okay, and then it still hit the stop loss and you lost even more than you originally planned. Okay, here is you bought high. So simple rule of trading is you buy low and you sell high. But if you bought high, there we go, put that in. And if you sold low, put that in there. Your trade size too big, okay, if you over leveraged your account, guys. And then revenge trade after a loss. This often happens if you lose and then you get angry, and then you double down, you go even bigger, and you revenge trade, and then bang, blow your account. Okay, boredom trade, right? If you're waiting for the market to come to a specific level or form a specific pattern, and you think, oh, it's going to get there, and you trade out of boredom, right? You trade out of boredom, terrible. And then less than 3 confluences, also stop hunted. Now if your trade hits a stop loss and the market keeps going, that's good. It means your stop loss was correct. But if your stop keeps getting tipped and then it goes in the original direction you anticipated, that means your stop placements are wrong. Okay, you're being stop hunted, so you put that down there. Scalping, guys, you're competing against the most intense algorithms. You don't want to scalp. If you go, because impatient traders go on the lowest time frames, and then they try scalp, and eats you up. You need to be a long-term, more of a swing trader, okay? No stop loss. You get in a trade, you don't have a stop loss, and it just goes too deep. And then you're in too much of a loss, and you can't take it out, so you hold it, gets you in trouble. So if there's something that you see that you consistently do, right, over and over and over again, right, over and over, and then you see that eventually a pattern will form, right, and then you see, okay, this is my biggest problem, and this can all be done in 10 trades as well. So every week, guys, you can analyze and adjust yourself, right? This is golden. You guys know, you guys have no idea. So I'm going to send you guys the link. It's on Google Sheets. You guys open it up on your computer, on the laptop, potentially the phone as well. And then enjoy, guys. Enjoy. Use this. Trust me, use it. It is life-changing. So peace out, guys. Have a blessed one.